This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. We're talking Trend Commandments today. Trend Commandments is a book that I wrote a few years ago, but it was written in a perspective of timelessness. Meaning, those chapters, a few examples aside, but the chapters in Trend Commandments were designed to be timeless. Insights you need for right now. It doesn't make a difference whether it's November 2023 or November 1913. There are timeless principles. There are ways, methods, techniques that you need. You need to know what markets you're going to track. You need to know when you're going to enter. You need to know how much you're going to bet on each trade. You need to know when you will exit with a gain or exit with a loss. Those are trend following principles. Those are the 5 issues you must know to be a successful trend following trader. And the 3 chapters I'm about to play from my audiobook for Trend Commandments take you right into that headspace. Without any further delay from me, except you know what? One further delay from me. You got a question? Got a question for me? Send me an email, michael@covel.com. I will answer any damn question you have. Now back to my point. Without any further delay from me, I hope you enjoy these 3 chapters from Trend Commandments talking about fundamentals as religion, systematic trading, and change. Again, I hope you enjoy.
Chapter 7. My own view is that this planet is used as a penal colony, lunatic asylum, and dumping ground by a superior civilization to get rid of the undesirable and unfit. I can't prove it, but you can't disprove it either. It happens to be my view, but it doesn't challenge any of the findings of Darwin or Huxley or Einstein or Hawking. Fundamentals are religion. There are 2 basic market theories. The fundamentalist studies economic realities, supply and demand factors, that they believe underlie market values. Fundamental analysis relies on government policy, economic projections, price-earnings ratios, and balance sheet analysis, and so on, to make buy and sell decisions. The religion of fundamental analysis is about telling stories. Crude oil traded near an 8-week low because of concern fuel demand will be curbed amid signs of slowing economic growth in the U.S. and the U.K. History suggests the time is right to buy Dow stocks. It's not too late to profit from rally as markets cycle shifts in favor of blue-chip stocks. They're cheap by recent historical standards. The index's trailing price-to-earnings ratio, a measure that shows investors how much they are paying for $1 in earnings, is well below what it has averaged. The price-to-earnings ratio for the S&P 500. Commodities look to be more expensive in the coming seasons and coming weeks to months. Has the metals correction run its course? My gut tells me the indices are overdue for a setback, but the jury is still out. Secular decline over the last 4 cycles. We feel an interim top is in. Decline in the nominal GDP. Based on supply and demand constraints, corn and soybeans need to trade higher to ration demand and to find more acreage. Initial unemployment claims. Is this just a correction or could it turn into something more serious? Political and social unrest in the Middle East. Big miss in headline payrolls. Key driver of seasonal demand patterns in gold. A bullish USDA report aided in corn appreciation. Rising energy and materials shares, spurred by surging oil and gold prices, have kept stocks in positive territory. The FOMC is meeting today and tomorrow, so stay alert as even inaction can be a market mover. EBITDA. The fundamentals never stop. So, do you buy or sell oil now? Exactly. Who knows how to really trade with fundamentals? Very few, if any, know how to use them. This is not new. People have told stories for centuries. It is an activity that calms and soothes. Think about religions. Many were created to satiate a desire for order. Investors are no different. They want cause and effect explanations and feel security in the illusion that there is a deeper understanding. It does not matter if the money-making strategy works or not. All that matters is the story. Sheep go to slaughter much easier when they're comforted and showered with sweet nothings. So how can the religion of fundamental analysis, taught on every college campus and practiced at every mutual fund, generate repeatable alpha? It cannot. Example: one famed financial website pointed to chocolate pudding in their bio. When they were young, they learned about stocks from their father at the supermarket. He would say, "See that pudding? We own the company that makes it. Every time someone buys that pudding, it's good for our company. So go get some more." That story might be cute, but it is childlike ideology. Krispy Kreme makes great donuts, no doubt, but its stock is around $6 years after reaching a high of more than $40 a share. The story is irrelevant. However, even the so-called educated don't see clearly. A billion-dollar fund invited me to talk. They wanted to invest money into trend following, but were having a hard time accepting that it was not rooted in fundamentals. They were comfortable with a trader who knew one market alone, fundamentally. They worshiped the idea that a trader could know everything about some one market, which would supposedly translate to profit. They could not grasp trend following. It does not matter if you're trading stocks or soybeans. Trading is trading, and the name of the game is to make money, not to get an A in how to read a balance sheet. Technical analysis, the other market theory, operates in stark contrast. It is based on the belief that at any given point in time, market prices reflect all known fundamentals for that particular market. Instead of trying to evaluate fundamental factors, technical analysis looks at market prices themselves. There are essentially two forms of technical analysis. The first is based on reading charts and using indicators to supposedly predict market direction. For example, here is a mixing of fundamentals and predictive technical analysis. Grains all made subtle bull breakout technical moves last week as continued fear of a global grain panic builds premium into these markets. I do believe that the grain rally should be sold into as it will be short-lived in 2011. The market is in the what-if stage of the winter season as they get ready for the plantings. What if China needs to import corn? What if Australia's wheat crop is gone? What if cotton acreage squeezes beans? Well, how about what if the market meets demand? I do not expect grain prices to test 2008 levels. The fundamentals are not there yet, and the hype isn't strong enough. Soybeans are a good spread play against corn, but overall I would be a put buyer across the board. Rice is a sell into this short covering rally with straight puts. That is a view of technical analysis held by many. It's worthless. Run when you see that kind of talk. Yet there is another type of technical analysis that does not try to predict. Trend followers are the traders who use reactive technical analysis. They react to market movements and follow along, without a story. You can mix fundamental analysis with trend following. You can mix it with astrology, four-leaf clovers, chicken bones, lucky crickets, and Aunt May's arthritis cure. But why would you? Except to give the appearance that there's a special sauce to trend trading. Chapter 9. You don't need to know what will happen next in order to profit from whatever happens next. Systematic trend following. What is trend following trading? The first part is trend. That is very straightforward. Every trader needs a trend to make money. Following is part two of the phrase. Trend followers, wait for a market to move first, and then they follow it. Now, some argue that the term trend following is too imprecise. Others use terms like global statistical financial analysis or managed futures to describe the strategy. That debate will not be solved here. If you do not like the phrase trend following, substitute your term as you keep reading. Trend following trading is reactive. It does not predict market direction. Trend trading demands self-discipline to follow precise rules, no guessing or wild emotions. It involves a certain risk management that uses the current market price, equity level in your account, and current market volatility. Trend traders use an initial risk rule to determine their trading size at entry. That means you know exactly how much to buy or sell based on how much money you have. Changes in price may lead to a gradual reduction or increase of your initial trade. On the other hand, adverse price movements will lead to an exit. A trend trader's average profit per trade is significantly higher than the average loss per trade. Trend following aims to capture the middle or the meat of a market trend, up or down, for profit. You will never get in at the absolute bottom or get out at the absolute top. Stocks, ETFs, LEAPS options, bonds, currencies, futures, and commodities are all ripe to trade. This is the only trading strategy that can be traded on a desert island. As long as price data is available, all else is inconsequential. Media, fundamentals, broker options, talking heads, and so on are simply not necessary to profit. Yes, initial discretionary decisions must be made as a trend follower, such as choosing a trend-following system, selecting a portfolio, and determining an appropriate amount of risk. However, after the basics have been set in motion, you can systematize trend trading rules and automate your daily trading life. This is not day trading, where you are glued to the screen all day in some Red Bull-induced hyperactivity bender. However, you have to maintain agnosticism to market direction for trend trading success. Unfortunately, not everyone comprehends or wants to comprehend that. Consider Erin Burnett of CNBC. She was interviewing David Harding, a successful trend trader, and asked, "A lot of people obviously want to know what your secret is. What is the magic bullet?" Harding replied, "The secret, strangely enough, is not having an idea of what we are going to be doing in advance. We react to the unfolding market's trends rather than make forecasts of what's going to happen." Burnett missed his point in response. "When you look out right now, do you think, big picture, I know you are quantitative, but do you believe that we are in a fundamental cycle, or are we in a bubble?" Harding, "It's not false modesty for me to say I don't know. I really don't know. I really do not have the gift of second sight." Consider fundamental investor John Hussman. His writings are always insightful. He makes a cogent case for an out-of-control Fed and Congress, but consider an excerpt from his recent letter. "In hindsight, I frankly underestimated the willingness of investors to believe that the underlying structural difficulties of the economy, which still persist in my view, were so easily solved by disabling fair market accounting disclosure and repeatedly violating the provisions of the Federal Reserve Act. In any event, it is my job to not only defend capital, but to achieve returns despite the recklessness that policymakers choose to pursue." Trend traders use an entirely different type of analysis, not based on traditional reasoning. Trend followers do not have Hollywood narratives to explain market bubbles on top of bubbles. A trend follower does not have to know any of the things Hussman laments not knowing. Buy things that have gone up on the theory that they will continue to go up. Short things that have gone down on the theory that they will continue to go down. Chapter 10. Empty your mind. Be formless, shapeless, like water. Now you put water into a cup, it becomes the cup. You put water into a bottle, it becomes the bottle. You put it in a teapot, it becomes the teapot. Now water can flow, or it can crash. Be water, my friend. Change. Markets go up, down, and sideways. They trend, they flow, they surprise. Have markets changed? Not only have markets changed, they will continue to change. Check your history books. If you have a valid market philosophy, learning to accept that change and flow with it is your greatest asset. No matter how ridiculous market moves appear at the beginning, and no matter how extended or irrational they seem at the end, following trends is the rational choice in a chaotic, changing world. That thinking leaves trend followers as generalists when it comes to their trading strategy, and that's not easy to accept for many. The dominant trend within universities is ever narrower specialization. A higher premium is placed on deep knowledge within a single field, read fundamental expertise in one market, versus broad wisdom across multiple fronts. For example, one trend-following practitioner started trading trends in 1974, making hundreds of millions in profits and perhaps billions for clients. The major strategic elements of his trend-following trading systems have never changed. He was blunt. The markets are just the markets. I know that is unusual sounding. Occasionally, someone trying to promote something or start a debate will argue that trend following has to change due to changing market conditions. Specious. The root of trend following is based on responding to change. It is designed to be adaptable. Does that mean every systematic trend trader will take the risk of shooting only for huge returns? No. Does that mean every trend trader will capture a trend in the exact same way? No. The trend-following way has many practitioners and many recipes. However, just as there are thousands of car models, they are still cars.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.